Understanding the basics of Bitcoin and cryptocurrency? Hey everyone, welcome back to my channel. Cryptocurrencies have captured the imagination of the public and the attention of investors worldwide. Among them, Bitcoin stands out as the pioneer and most well-known digital currency. But what exactly is Bitcoin and how does it work? Moreover, what are cryptocurrencies and why do they matter? In this comprehensive guide, we delve into the basics of Bitcoin and cryptocurrency, exploring their origins, mechanics, and significance in the modern financial landscape. What is Bitcoin? Bitcoin, introduced by an anonymous person or group using the pseudonym Satoshi Nakamoto in 2008, is a decentralized digital currency. It operates on a peer-to-peer network, allowing users to send and receive payments without the need for intermediaries such as banks or payment processors. Blockchain technology. At the core of Bitcoin's operation is blockchain technology. A blockchain is a distributed ledger that records all transactions made with Bitcoin. Each transaction is grouped into a block, which is then added to the chain in a chronological order. This decentralized ledger is maintained by a network of computers, or nodes, each running Bitcoin software, mining, and proof of work. New Bitcoins are created through a process called mining. Miners use powerful computers to solve complex mathematical puzzles, which validate and record transactions on the blockchain. This process, known as proof of work, POW, requires significant computational power and energy consumption. In return for their efforts, miners are rewarded with newly minted Bitcoins and transaction fees. Limited supply. One of Bitcoin's defining features is its limited supply. The total number of Bitcoins that can ever exist is capped at 21 million. This scarcity is built into the protocol and ensures that Bitcoin cannot be inflated like traditional fiat currencies. As of now, over 18 million Bitcoins have been mined, with the remaining coins set to be gradually released over the coming years. What are cryptocurrencies? Bitcoin paved the way for the development of thousands of other cryptocurrencies, collectively referred to as altcoins. While Bitcoin remains the most prominent, other cryptocurrencies offer different features and use cases. Ethereum, for instance, introduced smart contracts, allowing developers to build decentralized applications, dApps, on its blockchain. Ripple focuses on facilitating fast and low-cost cross-border payments for financial institutions. Litecoin aims to be a faster and more scalable alternative to Bitcoin, while Dogecoin started as a meme but gained popularity as a tipping system on social media platforms. Utility tokens versus security tokens. Cryptocurrencies can be broadly categorized into utility tokens and security tokens. Utility tokens, such as those used on the Ethereum network, provide access to a specific product or service within a blockchain ecosystem. Security tokens, on the other hand, represent ownership of a tangible asset or equity in a company and are subject to securities regulations. Initial coin offerings, ICOs. In the early days of cryptocurrency, many projects raised funds through initial coin offerings, ICOs. An ICO is a crowdfunding method where companies sell a percentage of their newly issued cryptocurrency in exchange for funding. While ICOs offered a way for startups to raise capital quickly, they were also prone to scams and regulatory scrutiny. As a result, the popularity of ICOs has waned, and alternative fundraising methods, such as security token offerings, STOs, and initial exchange offerings, IEOs, have emerged. Why cryptocurrency matters? The rise of cryptocurrency has far-reaching implications for various industries and sectors. Here are some reasons why cryptocurrency matters. Financial inclusion. Cryptocurrency has the potential to bank the unbanked by providing access to financial services to individuals who are excluded from the traditional banking system. With just a smartphone and an internet connection, anyone can participate in the global economy and send or receive payments with ease. Decentralization. Cryptocurrencies operate on decentralized networks, meaning they are not controlled by any single entity or government. This decentralization fosters censorship resistance, as transactions cannot be blocked or reversed by a central authority. It also reduces the risk of systemic failures and increases the resilience of the financial system. Borderless transactions. Traditional cross-border transactions are often slow, expensive, and subject to intermediaries' fees. Cryptocurrencies enable near-instantaneous and low-cost transactions across borders, bypassing the need for banks or remittance services. This has the potential to revolutionize the way money is transferred globally, particularly for migrant workers sending remittances to their home countries. Innovation and disruption. Cryptocurrencies have spurred innovation in finance and technology, leading to the development of new business models and applications. Decentralized finance, DeFi platforms, for example, offer various financial services such as lending, borrowing, and trading without intermediaries. Non-fungible tokens, NFTs, have created new opportunities for digital ownership and provenance tracking in art, gaming, and collectibles. Challenges and risks. Despite their potential, cryptocurrencies also face several challenges and risks. Volatility. Cryptocurrency prices are highly volatile, with significant fluctuations occurring within short time frames. This volatility can deter mainstream adoption and hinder cryptocurrencies' ability to function as stable stores of value or mediums of exchange. Regulatory uncertainty. The regulatory landscape for cryptocurrencies remains uncertain and varies from country to country. Governments and regulatory bodies are grappling with how to classify and regulate cryptocurrencies, leading to ambiguity and legal complexities for businesses and investors operating in the space. Security concerns. Cryptocurrency exchanges and wallets are frequent targets for hackers due to the large sums of money they hold. High-profile hacks and security breaches have resulted in the loss of millions of dollars worth of cryptocurrencies, highlighting the importance of robust security measures and risk management practices. Environmental impact. The energy consumption associated with Bitcoin mining has raised concerns about its environmental impact. The proof-of-work consensus mechanism used by Bitcoin and some other cryptocurrencies requires vast amounts of electricity, contributing to carbon emissions and environmental degradation. Bitcoin and cryptocurrency represent a paradigm shift in the way we think about money, finance, and technology. While they offer numerous benefits, they also pose challenges and risks that need to be addressed. As the industry continues to evolve, it is essential to understand the basics of Bitcoin and cryptocurrency to navigate this rapidly changing landscape effectively. Whether you're an investor, entrepreneur, or simply curious about the future of finance, staying informed and educated is key to harnessing the potential of cryptocurrencies responsibly. Please like and subscribe to my channel and click the bell icon to get new video updates.